And good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Thursday, October the 6th, 2022. Basically an inside day today over the ranges that were set yesterday. We actually traded an even tighter range until the very end of the day. In the final minutes of our session, we saw the market sink below 11,523 in the NASDAQ, and in the S&P, I believe that level was about 3755 or something of that nature. Now, I have nothing really to be adding or taking away from our current views or my current views. And the minor wave one that I presented yesterday in terms of the primary B wave remaining in place as a completing at 4327 here in the S&P. And then we produced intermediate wave one, intermediate wave two. We're inside of the intermediate third wave. This I'm actually going to leave right now as minor wave one, as it seems to start picking up more credibility as being the case. Although previously I had marked it as an intermediate third wave, and this would be a 4. That one lesser and lesser as I get on with the week, but it's still there. Both of those call for additional downside. So even if I'm going to leave this as a 3, then the 4 is likely complete. As at a minor wave 2, it also is appearing that it's going to be complete. Now, unless tomorrow's employment situation numbers gloriously show that the Fed is meeting its goal with higher unemployment, which will help to ease the inflation gripping all of us here in the United States. Remember, higher employment, while a good thing for our heart that more people are working and able to then be able to support themselves and their families, et cetera, it is inflationary in and of itself. And so when we have an improvement in the unemployment rate, in other words, more people file and now are receiving unemployment, it takes a lot of that wage pressure off, believe it or not. And that then should begin to allow the higher interest rates to start to slowly work. Now, remember, I'm not saying that that's going to be the reason to go jump and go whole hog and buy everything in sight because ding dong, the big bad inflation is dead. That's not the case at all. Inflation is still real, folks. It's still concerning. It's still hitting us hard at the gas pumps, at supplying natural gas to our homes for heat and for cooking and for everything. Those prices are continuing to go up. And that will continue to have a grip on everything downline. So an easing of inflation has not even begun. I hear about at the long end of the curve that, interest rates are, we're beginning to ease back. We're beginning to ease back. And that is suggesting that the market is suggesting that the Fed's going to start to ease. That's a narrative that's been spun, and a lot of people are buying into it. And now suddenly the bond market has shed 2 or 3, the long end of the curve, the 30-year, has shed almost 3 points. Since it rallied up to 129, now trading back at 126. So suddenly the intensity of this rally has died off. We're continuing to see pockets of strong buying, but I believe that's just retail continuing to come in this week. New quarter, new 401k, new IRA money, all being put to work, quote unquote. So we still are seeing that. But I have to tell you, I'm now finding that the market seems to be having a little bit of trouble getting its bearings and finding its direction. Now, today we had jobless claims. That was initially well accepted. But then we have additional news coming from other parts of the world, coming from the Ukraine, coming from Russia, coming from within our own country, that seem to really begin to put a lot of chips into the narrative about inflation backing down, interest rates easing up, et cetera, et cetera. So on those counts that I presented in terms of that the market is about ready to turn and just, again, fall off its cliff, those are now picking up a little bit more credibility, a little bit more potential, a little bit more probability. So even though we get them coming in, even though today they pushed Apple up above 147, they were going. We're heading for 150, and then we want it all for tomorrow. Then suddenly it starts to chip, and come down. AMD up 1 or 2 points early on, ends the day lower, and is now after hours $2 and almost $3 lower than the close. Why? Because AMD came out and gave a little talk about what's reality and what's not. So when you start to see this, plus this morning, I don't know who was not paying attention, but several of the brokerage firms were putting in their adjustments to earnings, to price adjustments. And some were up, many were down. So again, we continue to see the whole inflation scenario continue to march forward, with companies now coming out and talking about we're not going to make as much. Our sales aren't going to be as robust. We're taking precautions due to inflation, due to how it is affecting our sales, et cetera, et cetera. We're seeing more of that now come out. After we've already heard from Ford, we already heard from Apple. Months ago, we heard from Apple. So we've heard from these companies, but I guess nobody decided to believe them. And now that we're right on the doorstep of the earnings beginning, now suddenly we're making our adjustments. That's fine. Markets ebb and flow. That's to be expected. So here we sit. I have no changes to make, but we come down. We made session lows in the after hour, and I'm not sure exactly where the markets will be intending to restart in about 35 minutes, 40 minutes. But what I want to say is that the upside, I mean, for what I can come up with, and let me just go down to the hourly on here, and we're going to get right into the day. So we can see tremendous rally. So we had Monday, we had Tuesday, we had Wednesday. Wednesday was a nice corrective day. And then overnight, and then we had this great rally. And then we went back up and we tested it again. Then they tried again today, and it was immediately rejected. Immediately rejected this morning. This was on the jobless claims. And then immediately rejected. They brought it down. They tried to buy it up. They brought it down. They tried to buy it up. They brought it down, brought it down, brought it down. So each time they attempted, it was met with resistance and rejection. So we've got these two camps going. I cannot really tell you what all of this will be. I can say this is A, this is B, this could be the C, very, very short, but it could be. Or this is A, this is B, and this is 1 of C, 2 of C, and now we're going to blast through the sky? Maybe. I am not sure. The market needs to tell us. But I'll tell you, the way things are trading, the market is unsure. So this is where we are. And if the powers that be that run all the models are really not willing to come in and push one way or the other, we're all sitting in the same boat, waiting for more information, waiting for additional data to be countered or cementing what we believe is going to be coming. So again, I've not seen any changes to any of the inflation picture, the possibility of recession, and the earnings are going to be highly affected by the inflation that we've now been going through this year, particularly this whole quarter, that we'll see finally whether the big titans, how they're doing with this inflationary storm. So we're going to start to be able to put 2 and 2 together and hopefully come up with 4. Let's say that. But for right now and for tomorrow, I cannot dismiss a rally. In other words, we'll get the jobless, the employment situation numbers pre-market. That's 8:30 Eastern, 5:30 Pacific. We will know. Right now, this thing's capping right here. It's sat and closed and resting on the hourly 200 EMA. So again, we've gone up, we broke through, we've now broken back down, we traded in between and ended below the hourly 50, SMA and EMA. So that brings us down to here. So, and now you're starting to see, oh, look, everything's turning and arcing back down. The 20 is now heading lower. The 8 already, the 4 already, pointing lower, pointing lower. So has this now completed and we're just going to start to drop? If so, we know that it's either going to be a minor wave 2 or it's going to be an intermediate wave 4. I'm more leaning again now towards this minor wave 2, but remember what that does suggest is the third wave that's coming will be quite severe. Quite severe. If we've only done minor wave 1 of intermediate wave 3, and now we've done minor wave 2 of intermediate wave 3, remember 3 of 3, that center portion of a third wave is usually pretty strong. So if it's going to continue and we're just going to break down from here, we're just looking for this thing to start to go. Give up 3,700, start to head down, give up 3,600 and continue, because all of this would have been a folly. All of this has no place in reality in terms of, oh, I can say why I paid this for that, why that should continue to go higher. We would be missing all that information, and the natural thing would be, okay, fine, we're out, we're selling it. So that would be if we're going to continue to the downside. Upside swings should also be strong from this level, right? If indeed we're going to pick up and we're going to run higher in a continuation of this rally phase, as best that I can count it, it also would be some sort of like a third wave. If this is 1, this is 2, 1 of 3, 2 of 3, 3 of 3 up. If this is A, this is B, and this is 1 of C, 2 of C, 3 of C up. So 1, 2, got a third coming up. A, B, we can have a stronger rally. So we've got both directions that right where we're sitting should produce a pretty strong reaction. One way or the other, we should move, and we should move swiftly off of these levels. Now, again, we're just done for the day. We still now got to wait for the Asian markets to open first. Globex opens in about 33 minutes. And then at 8 o'clock Eastern, 5 o'clock Pacific, we get Asian markets beginning to open. They will have their 2 cents in their say. And they've got their own stuff going on over there as well. So everybody and most of the areas of the globe have things that are specific happening within their own borders. So if these things are well received, then I'm looking for the upside, and it should be robust. If they're not, then I'm going to look for the downside to continue. And here's the gig. We could get that downside to continue all the way until we get the employment situation numbers tomorrow morning. They may just push it down, and they could bring it all the way back. Say they bring it all the way back down to 36.50 or so. Then what we're really kind of looking at is, well, this could be a 1. This could, remember, this could be A, or this could be A. And now we're just going to finish a B wave, and then we still get a C wave. There's still a lot of ways to view this. That's why I'm leaving it blank. So what we can expect, that I think is key. Instead of trying to determine, well, how far can we go? How far can we go up? Let's just start with what happens and what should I look for if we get negative? You're looking for it to move quickly. What should I look for if it turns positive? You're looking for it to move higher very quickly. In fact, from here, if they want to move positively, I'd be looking for them to come right back up above the 4, the 8, the 50, the 20, and the other 50, and keep on going. That's what I would be expecting if they're going to keep a positive spinning. Negative, it's going to break this 50, it's going to break that support, it's going to head for this. The SMA at 37.03 right now. Both are flat, that's why it's providing support, and this would too, unless it starts to angle. But right now, it's pretty flat. So I'd be looking for it to provide support. If it goes through it, we got nothing. This is up next. So that's the S&P. Let's head over to the NASDAQ, which basically is telling us the same story. Again, we closed the extra hour of trade. We closed right on the 200, the hourly 200 EMA. We slipped through the 20, we slipped through the 8, we slipped through the 4, we slipped through the 50s, both the EMA and the SMA. And we're resting right on the EMA. If it breaks below 15.0, I think this is 4, or actually it's just below 1,500. 1,500, boy, 11,500. How about that? If it breaks below, that's going to, I think, pull in some additional selling. Again, same deal. It will pull in some selling. And then below that, we have the SMA, the 200 hourly SMA, and that's at 11,386. We do find we have some support here. It's going to be very light because remember, this Fibonacci is for downside. And what we'd be looking for from here is what this third wave, if that's what it's going to end up being, can look like. And right now, wave 3 would be equal to wave 1 at 9,633. Remember what I talked about. If this is actually the case, where this is 1 and this is 2, wave 3 should end up well below 10,000. I'm not saying that's what's going to happen. I'm saying if this is the count that is in process right now, that would be my expectation from wave 3, based on my knowledge of Elliott wave and my knowledge of the relationships between these two waves, the first and the third. So I'd be looking for this. And then that's only, we're in intermediate wave 3. So where could all of intermediate wave 3 end? We're looking pretty far down. And remember, I'm only looking for the whole thing to kind of come in here somewhere in the price territory of the fourth wave of one lesser degree, and that's going to be the primary wave 4 down here at 66.28.29. That was March of 2020. So here we are, 2.5 years later, staring it back in the face, possibly. So what we're looking at, now I'm going to take this off, and now we want to look at what about that wave C? If indeed we're going to hold this thing here, wave C would be equal to wave A at 8,042, I'm going to call it. Now, mind you, we just had that measurement where minor wave 3 can come down to about 9,000-ish, somewhere in the 9,000 handle. That just puts in minor wave 3. Where's this intermediate wave 3 going to end? Down here with a little pop, and then for an intermediate wave 4, and then an intermediate wave 5 brings us down into here. These are all possibilities now, how this thing is unfolding. Remember, also what I'm looking for as this come down is we're going up to the cycle degree, right? We had the intermediate ABC that gave us the primary wave A. Now we have primary A, primary wave B, primary wave C finishes. That gives us cycle wave A. Then we're going to get a cycle wave B rally. That's out there, but it's still out there. No sense, please do not buy now because you'd be way early. So these are what's coming as we go into year end, and then as we start to look at next year. We may have a very strong down end to 2022. That has to remain out there as a strong possibility. And any stronger rally may be held off until next year. But again, where the market's going to let us know and the market's going to play out. So here we are, back down to the hourly chart. Let's open it up. You can see it looks pretty much the same. But here, if we've got an A, B, this could be the C wave. Could be real short, real sweet. This could be an ABC down for the internal, if this is A, this is B, this is 1 of C, 2 of C, we rally. But from here, again, same deal as I said in the S&P, I would be looking for the market. If it's going to rally, it picks up the steam and it goes. And we don't get like we got there, where we get that strong up bar, forms a hammer, you're looking for some follow through, you got itty bitty amount, and then bam. Try to rally it, bam, bam. And trust me, they were really pushing the NASDAQ 100 all the way until the end of the day when AMD came out with their noise, Apple started to back off, Google backed off, et cetera, Intel, all of them. The only one that didn't, because it managed to stay green, Metaverse. But that one would be down. Microsoft up nicely today, except at the end of the day, bam, going back down. Netflix, don't know why, but everybody thinks that the addition of ads on their platform is just going to bring in all this revenue. But again, think, folks, who's got the money to spend to put ads? They're going to start cutting back on a lot of things if inflation stays at the rate it is. If they can't get inflation under control and interest rates continue to go up. And remember my conversation just yesterday, I'll repeat it again today. If they really truly want to be serious about fighting inflation from the past, from historically, going back to the 70s, going back to the 80s, and actually you can go back before, in order to really knock inflation off its keister or onto its keister, that the interest rates have to be raised to above the inflation rate. So if we're going to think inflation is roughly 9%, where do interest rates need to be? Here's the other thing that I pay close attention to, folks. Every week, almost every day, there are Treasury auctions. I have not seen one downtick in the rate, and I've been now watching them for several months. Every single one. Now, the short end of the curve is coming in closer the very short terms, the 12-week or the 13-week and the 4-week T-bills over 3%. Some a little bit longer, heading to 4 or are now over 4. This is a reality. So we're starting that from, they were almost to 0. And now we've gotten that high. But the interest rate needs to be over 8. What would that do to our market? What would that do to all of these companies who borrow cheap money to get through and to continue to do what they do? What's that going to do to credit cards? What's that going to do to home loans? What's that going to do to auto loans? What does it do? It shuts down the economy. So that's still out there. Whether people want to wrap themselves around it and actually accept it and be more cautious about where they want to put their money, I don't know. So for tomorrow, same deal. Upside should be strong. If it's going to happen, should be strong. We should get ourselves above all of this and start back again at 11,700, get above here. If we can get above this level, 11,730, we should have clear sailing. We've got 11,800, but our stronger resistance does not come in. And again, I'm going to put those upsides in, right? We've got the 2. And if we're looking for what we could possibly get on upside, I don't want that one. Sorry. I want to go over and just put retracement. Boom. Boom. We have 11,938. So we're above the 382, which was 11,691. Actually, right now we're down below it, but we've been trading above it. So first we clear that, clear the 20, which is at 11,738. That's with the 20 period on the daily 20. It's 11,738. Thus far, this should be the second or almost the third day that has held firm in terms of that's the no-fly zone. You're not going above here. So it would have to do that and would have to do it and push without looking back. Then we're going to get a clear signal that we are heading towards 11,938. Remember, please, 11,940, actually, we're down even lower. 11,921 is where intermediate wave 1 completed. If this is an intermediate fourth wave, cannot cross above. And it certainly would to get to that resistance. That's why this is remaining a 1 right now. Because the third, even though it's not the shortest yet, it would, no, 1 would be the shortest. So it's longer than wave 1. If I put the 3 there, I would still think this thing just cruises lower. So, but it can, because it's going to go up, it should do it quick. If it's going to go down, it should break and tumble. Again, pushing this up, and let me bring it back down to that hourly. I don't see a whole lot in between. We're sitting on the hourly 200. Then we have support at 11,385. Then we've got, guess what? The 200, hourly 200 SMA right there. So break here, break there, we got nothing. Got a little bit of a black hole. You can go over here. Where are you going to find our price support? Sometimes 11,230, sure. 11,126, sure. But it's just price support. It's just a place to take a pause. It's not a point where it's going to hold and rally. Could rally a little bit, but I'm not looking for any strength in any of these levels. This was all a part of a strong rally. So when it comes down, it will be a part of a strong give up rally, decline. They're giving it up. And that would be the next level. And that's just the previous low. And that's going to come in at 11,000. 11,000, excuse me, Jesus, long day, folks. 10,891. Okay, I am going to end it there. Tomorrow is expiration. I will be paying attention to what they want to do in stocks such as Apple, Amazon, Google, Metaverse, Microsoft, Netflix, Nvidia, AMD, Tesla, Twitter are all out there to be playing in play. And so I'll be watching to see what happens there, particularly in Apple. Apple was in control again this morning, gave up that control and ended down on the day. And it's continuing to tick lower as we move towards the opening of Globex. Not a pretty picture to kind of come into, but we'll see what we can do. So tomorrow, expiration. Tomorrow, employment situation numbers start. Jeez. The employment situation numbers are released at 8:30 Eastern, 5:30 Pacific. They will guarantee there's going to be a reaction one way or the other. There will be a reaction. Have a great trading day tomorrow. And the next update will be in the form of the Eye of the Storm podcast, and that will come on Sunday, October the 9th.